Hey everybody, welcome in. Today's episode is sponsored by Black Hoodies. I'm kidding. And of course, there's no sponsorship here. Anyway, thank you all for being here. Happy Monday. Hope everybody had a good time yesterday with whatever you were doing. And I know what some of you were doing. Anyway, let's jump in and talk about what we see today out there. Unusual day, a couple of unusual events, but we'll all cover and look at what's going on out there in the marketplace. So the topic of today is short-term dumpiness, long-term gamma squeeze. Future remains very, very bright in this space. That's why it's very exciting, but we need to be patient. So, channel's about math, money, and freedom, and none of this is financial advice, of course, ever. Just edutainment. So let's jump into the beginning. So I did speak a little bit last year, quite a lot actually, about Bitcoin becoming a risk-off asset. Well, over the last 30 days, believe it or not, we might be taking the baby steps to be there. Bitcoin outperforms major tech stocks by an average of 12% over the last 30 days. That's big. So I can't remember some of the numbers, but obviously Facebook was down, 46% compared to Bitcoin. When you look at Tesla, Bitcoin even beat Tesla by about 18.7%. Amazon, Bitcoin beat Amazon by 3.78%. I think Google, about 2%. So basically, a lot of our favorite names were beaten by Bitcoin. So Bitcoin is incredibly resilient out there, considering all of the crazy stuff happening out there in the marketplace. So fingers crossed, one day is the reason. So let's talk about some of the good news. The Intel Bitcoin mining chip is claimed to be 1,000 times faster than equivalent ASICs, which is extremely bullish news. Now, this was, I think, a Vice President of Development. His name is Raja. And they wouldn't come out and say this and make these claims unless they could really back them up. But not only is this chip 1,000x faster, but obviously if it is, and it's a tiny, tiny little chip, it'll use a lot less energy. So that final piece of kind of Bitcoin FUD could be done away with. So we'll see. I think also they started selling these chips before they've even hit the market. They're coming out later this year. But the number one customers that bought them all up, Argo Blockchain, The Block, formerly Square, in full disclosure. We own Square. Grid Infrastructure. And they're just buying up whatever they can. But just imagine if this chip is 1,000x faster and uses 1,000th of the electricity on a per process basis compared to the SHA-256s, that could really change the game. And it could also help decentralize the whole environment. The question is, can you get your hands on one? So I wish I could, but apparently they're all sold out. So there we are. That's the Intel news. Now, Bitcoin dominance just hit a 3-month high. So this is related to what I kicked it off with today, as I just ramble on here. But that is huge. That speaks to the resilience. We haven't been this high since the beginning of November. Very, very strong for Bitcoin. So literally, as Benjamin Cohen says, everything is kind of now bleeding against Bitcoin. So for Bitcoin to have that dominance, it means it's stronger than everything else. So well done, Bitcoin. Now let's look at some of the continual drainage, as we call it. This is from On-Chain College. And it's a beautiful little orange graphic. I do like orange myself. And it just shows you we are back at November 2018 or below November 2018 levels of the amount of Bitcoin on exchanges. So again, the drainage continues. And the weakness in the market isn't changing anything. In fact, as I discussed last week, whales continue to accumulate as they go forward. Let's talk about what this means for Bitcoin liquidity as it's tightening. So here is an article. Bitcoin liquidity tightens as Bitcoin held by exchanges hits 6-month low. And per the previous thing, 3-year low, 4-year low, no matter which way you look at it. But the value of places like Coinbase, Bitcoin's holdings, they have about 35% of all Bitcoin out there. And the second largest holder on exchange is Binance. And they have, I think $15 billion worth. Coinbase have about $100 billion worth. So it is getting squeezed more and more by the day. And the same thing is happening with some other names too. We'll talk about a little bit later. Let's talk about the hash rate. Not only is the drainage continuing and the supply going down, but the hash rate's going up. And historically, all the time, ever since 2017, I always saw price following the hash rate. And I'll prove to you it does in a minute, because a lot of people are confused by that. But here you see the hash rate is exploding. The hash rate is a 7-day average of about 201 terahashes per second, which is a new all-time high. And that's a 20% increase approximately since the start of the year. So it's going up big. So I'm not the only one to believe as well that Bitcoin price follows the hash rate, but so is Max Kaiser, the original OG, Orange Pillar extraordinaire, and Willy Woo. So what do those guys know? I don't know. But let's look at a chart and see if we can convince ourselves that Bitcoin price does follow the hash rate. So the hash rate is the purple line in the background, and the green line in the front is the Bitcoin price. And you can see that it is not a direct correlation, and there are some vagaries, but typically it does follow. Now, this is a bit of a log chart, so it's a little hard to see, but the overall trend is up and to the right for both categories. So therefore, I believe it does. And also, if you think of it logically, basically, the higher the hash rate, the more secure the network. The more secure the network, the more people it'll attract as we go forward, because it means the asset is safer. So think of Fort Knox with 1 tank versus Fort Knox with 1,000 tanks. That's what this represents. Anyway, let's talk about the potential gamma squeeze. As you guys know, I love gamma squeezes, especially for things like Tesla and stuff. And it's really interesting. But my friend, Greg Foss, was on an interview with what Bitcoin did. And, you know, it's always fun to watch Greg Foss because he is a little bit like me sometimes. We get very excited because we see the big picture. We know where all this is going. We just don't know when. So this is not happening today, but it will happen in the future. So I'm going to walk through some of the stuff that he said. He said, basically, a put on a put will lead to a gamma squeeze. Not today, but one day in the future. And he described equities as short vol assets. Bitcoin is a long vol asset. You've heard people like Greg Foss and Rob Paul talk about that as well. And I'll talk a bit more about that in a minute. But Bitcoin is designed to hedge all other assets. Everybody needs a little piece in their portfolio. And I've covered that as well a couple of times about the impact of just having a little bit of Bitcoin. And that's why people like Bill Miller are 50% Bitcoin now, because they bought a little bit a long time ago and it's just exploded in value. So he also talks to the fact that the open interest in Bitcoin futures hit an all-time high, and Bitcoin is a put on the Fed put, which drives a gamma squeeze on the Fed put. The Fed central bank, he believes, someday has to be long Bitcoin in order to protect itself. Think about it. There's a lot to unpack there. So I'm going to dig into a few little areas. First of all, short vol versus long vol. On the left, what you think you're investing in, and on the right, what you were actually invested in. The typical portfolio is only 3% long vol, and that 3% is very close to the 5% that everybody should kind of have 2 to 5% Bitcoin in their portfolio just to be long vol. Long vol usually involves, historically, buying options and profits when either realized or implied volatility rises, and the more volatility you have, the higher the options price. But the same goes for certain categories of assets, and that's the idea here. The volatility risk premium refers to the compensation an option seller receives in return for whatever they buy, like Bitcoin. So the other way to think about it is the Fed put, and what the Fed put is, as a reminder to everybody out there. The Fed put is the market belief that the Fed would step in and implement policies to limit stock market's decline beyond a certain threshold. And remember, a stock market decline of above 20% would prompt the Fed to lower interest rates. Think about that. So it's like it's almost a foregone conclusion. Like there's all this talk now of hiking rates and everything else, but they know that they can't. The higher they hike rates, the more they increase their debt, etc., kills GDP growth. And that's why it's called the Fed put, because it's a very, very safe play. And this came out during Alan Greenspan's tenure way back. And we'll see where it all goes. But the Fed has to continue printing. And the Fed, over time, the value of the dollar will go down, as we've seen with the debasement right now. And that's it. So go long vol, go long Bitcoin is the message from Greg Foss. Now let's talk about Bitcoin itself and the chart over the last 3 days. It has been it's actually 3 days and 5 hours. It's been in this tight range of 1.6% up and down. It's uncanny. And we saw this happen a while ago. And typically, when you see this type of tight range over the last 3+ days, plus minus 1.6, 1.8%, depending where you measure it from. Typically, it means it's going to explode up one way, up or down. We think it could go down. Well, let's explain why we think that. First of all, the put option dominance is super bearish out there. This is data from Glassnode, and typically higher put call dominance. When people are buying more puts than calls, either it can result in a tremendous squeeze or it is just very, very bearish. And there's so many unknowns out there, I wouldn't even blame people for buying puts. So much of this is for the 4th of March contract, which is out about 2 weeks, 2.5 weeks. And the market has a clear preference for puts with a strike between about, if you look at the chart here, between about 38,000 and 40,000. And they carry more than 2.5 times the open interest of the highest volume call option strikes between 40 and 58K. And this is just Deribit data, okay, not all exchanges. And Deribit tends to be sometimes a little bit more bearish than others, like Binance is too. But let's look at another chart that I like, another source that has max pain. Here we see all the purple bars or the puts and the green are the calls. And the put call ratio here is about 1.07. So there's a little bit more call buying, but it goes out in this date to the 25th of March. I went out a little bit further and you can see the max pain level is at 42,000. So again, it does kind of support the belief that a lot of people are very bearish, and therefore we might get some bearish wick action down, because last time we saw this tight thing, I said we're going to go up, and we did. This time, I believe we're going to go downwards because there's just too much uncertainty, and this smart money option behavior tells me there's too many bets on some downward movement, and I don't see enough action to drive a short squeeze up like we did a few weeks ago. So let's look at some more follow the money, where the money is going. Every week we do this. This is from CoinShares, and thank you to Sanjay for sending it to me. And this saw Bitcoin inflows totaling 25 million last week, and this is marking a 4-week run of inflows, with the Bitcoin regional variances focusing on Bitcoin. Now, Ethereum finally broke its 9-week spell of outflows. Yay for Ethereum. They had about 20.9 million in. Month to date is about 12.5. And year to date is still minus $100 million. So substantial outflow. But it's turning around, which is good. And that's also reflected by the whale action on Ethereum as well. And looking at some other names here from this chart, I circle the things that I want to draw your attention to is the week flows for Bitcoin and Ethereum, month to date, but the year to date, very bad. And of course, again, despite the weakness in Solana price, literally the Solana has been attracting all of the money. It's the only one that's literally every week getting money in, and it has the largest year to date inflow of plus 11 million. Next highest is multi-asset, which is a whole bunch of stuff. Litecoin's up there with 2 million. Ripple with 5. Ripple had a big week, pulling in about 2 million versus Solana 3.1 million. And that's kind of where we are. Also, some other names, Terra, Tezos, Cosmos, also inflows about 2.2 million as well. So we'll see where this takes us. You know, sometimes the big investments pull in money because of the access, the on-ramps, or the big bets made by smart money. So we'll see. Now let's look at the L1s rebounding. It's been brutal. Yes, L1s have all gotten hit, not just select ones, but we're beginning to see some stability in price. They still suck, but a couple are doing really well, like Avalanche. This is just for the last 24 hours. Avalanche is up about 4.2%, but Luna is up about 4% as well, but still hovering around that $54. Still a little bit of anxiety around some of the liquidity of Anchor. Solana is up 3.33%, but still under $100, which sucks. And Atom, which has one of the most beautiful charts I've ever seen, is up as well. And a lot of other names are kind of turning around, so things are stabilizing. But remember, we began this with the Bitcoin dominance. So when Bitcoin is dominant, it sucks money from everything else. And that's why we follow the money, look at the Bitcoin dominance, and look at the option action and everything else to give us a picture of where we're going to go, where the smart money is placing bets. Let's talk about some other good news for Cardano and Polkadot. The ETPs hit Germany. Cardano Polkadot ETPs hit Frankfurt Stock Exchange. And this is a subsidiary of a Swiss fintech organization that makes these products available. Think of ETP like an ETF in the US. The ETP stands for Exchange Traded Products. It is to be launched in Frankfurt Stock Exchange, opening up access to not only Germany, but also parts of Europe that can also trade these things. And this follows these two launches of Cardano and Polkadot, followed the Solana ETP earlier this month as well. So they're kind of knocking them off slowly but surely. But this will attract a lot more money into Polkadot and hopefully recover some of the price and Cardano as well as we go forward. So it'll be interesting. I'm going to try to find a way to track the actual money flows into these actual funds over time to share with you, see which one is performing the best. Now, Ethereum, let's look at where they are. They're kind of in a similar boat to Bitcoin in terms of balance on exchanges. You can see the balance on exchange is the actual blue line over the last 2 years. I put this chart from Glassnode, and you can see data from different sources shows that there's 17 million Ether on exchanges today, and this has been sliding significantly, as you can see for the chart, since about May 2021. And there was over 22 million on exchanges in May last year versus 17 today. So all of a sudden, 5 million Ethereum have disappeared in a little less than a year. So we'll watch this carefully as well. But there'll come a time when that supply crunch will hit and it'll drive price action. So just everybody be patient for that. It's coming. Future's bright. Now, latest vulnerability in hacking news. It's like the Wild West. I just want to urge everybody, please, please, please keep your crypto safe. Be careful where you store it. Be careful where you put it. Don't use anything wrapped if you can avoid it, unless for a very short window of time to make a trade. So this is from Optimism and Ethereum. Optimism is the layer 2 and Ethereum to help it scale. And a hacker did hack it. And he could have printed unlimited Ethereum from the bug in this layer 2 and Ethereum. Instead, he said, you know what? I'm going to be a good guy. Give me the $2 million bounty and I won't take advantage of this. And he did. So the guy behind it is a guy called Jay Freeman, who he invented. I know a lot of you out there used to jailbreak your iPhones. He's the guy behind that, which is pretty cool. And he was looking for bugs on blockchains, and he discovered this glitch, and it's something around some nano payment protocol. And Optimism uses this nano payment protocol, allows users to send small amounts of crypto with very low transaction fees. And he found that as a whole. So again, nothing is watertight out there. This is all new technology. Even Ethereum and some of their layer 2s are now vulnerable, like many of the other names we've covered over the last couple of weeks. So again, just be careful out there. And it was cool of that hacker to say, give me the 2 million instead. He's probably made a ton from the jailbreak of iPhone. Now, Cardano, probably in response to the Wormhole bounties that came out last week, Cardano have generously doubled their rewards. Their vulnerability award that are very high vulnerabilities, they've doubled their reward from 10,000 to 20,000, and for medium and low level bugs, $4,000 and $800 respectively. So they've doubled everything. So you can now get double your money. But think about Optimism, $2 million bounty, 20 grand with Cardano, or up to 10 million with Wormhole. So if you are a white hat hacker, could be a good time to make a lot of money right now, everybody. So enjoy. Now, there was a little bit of volatility with the stock market today, and it's annoying me because it had me a little bit chasing my tail, and I almost pulled trigger on a few things, and I didn't because it was just so weird. I have been waiting for a big dip downwards to move some money into the markets, and this nearly fooled me. So here you can see the NASDAQ basically had a huge hit, paired their early gains after Ukraine president said Russian attack is imminent. I'm always tired of talking about this Russian stuff, but this is what happened. Apparently, he was speaking glibly, like it was a joke. And the S&P went on such a ride Monday, shortly before 2 o'clock New York time. Index sank over 1.5%. Oil spiked above $95 a barrel, etc. All because apparently the assistant for the chief of staff of President Zelensky said, oh, well, he's skeptical of concrete dates, and we don't know if it's going to happen. We're not sure if it's a joke or not. But I'll tell you, you don't joke about this type of stuff when you got Putin knocking on your door. So this Zelensky guy, I don't know. So the question is, who's kidding who? Russian denials. American warns also of an imminent attack. Now the Ukrainian president says, joke. Speaking to people on the ground in Ukraine say, nope, no fear, it's not going to happen. So I don't know which way is up anyway, but I'm getting impatient and I'm going to start mobilizing into the market unless I see more signs of an imminent attack. Wait for things to get in. So that's kind of what I'm doing. Please devise your own strategy. So with that, everybody, hope you like the content today. I'll be back again tomorrow. Tomorrow's Octa on-chain technical analysis Tuesday, or Taco Tuesday, whatever you want to call it. And I'll see you all tomorrow. Big thank you to the moderators in the chat and everybody out there. I love you all. See you tomorrow. Gotta figure out how to turn this off now. There we are.